Welcome to HSBC Global Viewpoint, the podcast series that brings together business leaders and industry experts to explore the latest global insights, trends, and opportunities. Make sure you're subscribed to stay up to date with new episodes. Thanks for listening, and now on to today's show.
Welcome to this special TMI podcast series in collaboration with HSBC called Treasury Beyond Borders, Balancing Risk and Opportunity Through Global Growth. I'm Eleanor Hill, editorial consultant at TMI, and over the course of this series of podcasts, I'll be exploring how global treasury is evolving amid geopolitical shifts and digital transformation. Across the episodes, and with insights from HSBC experts, we'll dive into key themes, both globally and across different regions, from managing risk in uncertain markets to leveraging new trade corridors and emerging technologies. And for today's episode, focusing on Asia, I'm delighted to be joined by Sridhar Narayan, who is Head of Corporate Sales Asia, Markets and Securities Services HSBC, and Yvonne Yu, Head of Global Payment Solutions Greater China HSBC. So welcome both of you. It's really great to have you here, and there's so much going on in Asia that I know we've got loads to squeeze into this podcast episode. But Sridhar, let me come to you first. Maybe we can talk a little bit some background, some bigger picture on supply chains and all of the shifts that are happening. So this isn't a new phenomenon. It's something that we've been seeing a fair bit of in recent years. But how would you say that it's different this time round? What are the key issues that corporates are facing? Give us a sense of what you're seeing on the ground, what you're hearing from clients. That would be great.
Hi, Eleanor. Thanks for having us over. So it's a great question to start off the conversation. Historically, corporates have been guided by the conventional economic theory of comparative advantage, which emphasizes on where can I produce my goods efficiently at scale and how can I distribute it effectively to all my consumers. Now, this approach was focusing on cost effectiveness, efficiencies, and it allowed companies to maximize their production capabilities, distribution capabilities, and reach their products across global markets seamlessly. But since 2016, there has been a significant shift in the corporate strategy. And the one aspect that got introduced into decision-making is resilience. This became a critical factor. This was largely driven by the expected and perceived geopolitical risk. And it was also caused by, of course, the disruptions caused by the COVID pandemic.
Yeah.
Companies began to realize the importance of having very simply backup plans. And they started spending time and effort trying to figure out how to introduce continuity to their operations. And we saw strategies like China plus one, nearshoring, friendshoring, and onshoring. It all gained prominence. These strategies were not motivated by economic factors. The key need that the corporates were trying to address was alternate sourcing channel to mitigate one risk, which is resilience. And this, I would like to call it phase one. There were very clear objectives and there were consistent applications of resilience-focused variables. And the key beneficiaries, as we all know, were South Asia, specifically ASEAN, and some countries like Mexico, etc. Phase two, I think what we are living in currently, businesses are grappling with the challenges posed by the tariff measures announced by US, simply put, the first order and the second order effect. Historically, the Asian exporter community had benefited from low or very low single-digit tariffs from the US for most of the products. But the recent tariff increases, where it's baselining around 20%, give or take, have really introduced some economic challenges. You also need to consider the effective US tariffs have become, in most cases, 3x to 4x of what it was before.
Yeah.
And as you can understand, it impacts profitability, affordability, and in some cases, even sustainability of the very businesses that you are running. So unlike phase one, which was driven by resilience, phase two is driven by tariffs. It has been made more complicated by one simple element, uncertainty. There is a significantly higher degree of uncertainty. Let's take China as an example. We started with 10%, then it went to 50%, then above 150, and now we are close to 30%. Even now, when the base tariffs for most economies have been announced, 10 to 20% for most Asian countries, for example, there is still a lot of uncertainty around the final outcomes for two of the largest economies in Asia, China and India. And even outside of that, if you look at some sectors, take automobiles or semiconductors or copper or steel, We still don't know where the sectoral tariffs will land over and above the base tariffs. And let's not forget, we spoke about China plus one. ASEAN was a big beneficiary in Asia. And the one variable that is under question now is the definition of transshipment. It is still not very clear how transshipment is going to be defined, what goes into the calculus of defining transshipment. So in this very, very uncertain environment, obviously companies are facing difficulties in planning effectively. So the people who in the phase one had established alternate supply chains are perhaps finding it a bit easier to navigate phase two. But for people who entered into the ring in phase two, clearly things are very, very different. So what do I do with my business? Should I transfer some of my supply chain from one place to the other? Should I even commit some capital expenditure in pursuance of that theory? Because I don't know what tomorrow holds for me. So the one message I would say is that it's going to be difficult. It is challenging. But the only thing I'll say is that if you're a corporate finding yourself in that situation, you are not alone.
Oh, absolutely not. I'm sure many of the listeners will be thinking, yes, this sounds very, very familiar. But Sridhar, we'll talk a little bit more later about some of the things that clients are doing around tariffs and around the bigger risk management and supply chain pictures. So Yvonne, we've got real-time payments and digital banking that are redefining cash management at the moment. And we often look to Asia as leading the way in that space. There's a lot of rapid adoption of instant payments and all of these new digital banking solutions and innovations. So maybe just share with us your observations of some of the latest developments, what you're excited about, what you're hearing from clients.
Certainly, you're right. Asia has been at the forefront of digital finance innovation, particularly with the rapid expansions of real-time payments and the wild adoptions of various kind of payment methods such as e-wallets, right?
Yeah.
Now, this is driven by the always-on, always-connected economies, with consumer increasingly favoring digital channels for the transactions, prioritizing speed and convenience. Now, the opportunities in e-commerce in Asia, we are anticipating to reach around 3.8 trillion by 2028, which is amazing, right? Now, the critical questions for business is their readiness to leverage this trend through digitalizing the front-to-back business model and operations. Now, in Asia, what we have observed is substantial progress in the consumer-to-business digital journey, which was propelled by RTP developments, such as the cross-border connections between Hong Kong faster payment systems and Thailand's PromptPay, with the mainland RTP system, which we have just recently deployed in Hong Kong.
Yeah.
We also have a lot of innovative digital solutions developed by banks and fintech. Now, I just want to share for HSBC, we have made significant investment in building the RTP infrastructures across the region. Like, you know that we basically have got this deployed in almost every market in Asia, like around 15 to 16 of them. We have also introduced various digital solutions to support our clients' growth ambitions. Now, for example, we've launched the digital merchant service in Hong Kong, which is to enable business to consolidate various digital payments like cards, RTP, e-wallets into a single, scalable, and robust system, which is capable of handling high volumes of APIs and throughput. Now, this service is already operational in Hong Kong and is set to launch in other markets later this year. Now, we are also very cognizant that we need to support mobile commerce because this is wide accepting in Asia. And HSBC, we have innovated in the corporate card space and pioneered the launch of the Hong Kong first mobile virtual corporate card. This provides business with the convenience of integrating their cards with mobile payments and offer flexibilities in card issuance, enhanced controls, and seamless transactions for both online and in-store purchases and for the supplier payment.
Super stuff. So it's great to hear about all of that innovation that's going on. And I think half of the press releases that come into my inbox are from your Asia team, and there's always new developments. But it'd be great to know about the impact of all of this on treasury teams. We've got 24/7, 365 liquidity now, everything going on, so much more data. So how should they be preparing for this shift?
Yeah, so in today's digital transformation landscape, the role of the treasurer actually have evolved beyond the traditional liquidity management. Now, they are now central to the steering of the company's digital transformations, making data-driven decisions in order to enhance the strategic importance within the organizations. So as a result, treasurers are looking for more than just cash management solutions from the bank. They need a comprehensive perspective on the transformation strategy. It is crucial for the banking partners to keep them informed about the latest trends and developments so they can stay ahead and plan effectively.
And what about the e-commerce side of things and the real-time payments specifically? Because I speak to quite a few treasurers who are like, I might like to receive money in real time, but do I want to pay money away in real time? Tell us a little bit what you hear and the impact on treasury operations.
Yeah, this is quite an interesting dynamic, right? Because like you want to receive the money quicker and you want to pay later, but then that's the transformations of the journey, right? Because with the rise of the e-commerce and OTP, all the treasury must ensure that banking partners have the capabilities to provide end-to-end solutions for continuous payments, collections, and fund flow. I think having a deep liquidity of the bank is very important because you need to ensure that the money can flow 24/7 pretty much.
Yeah.
Now, data availability for decision makings, reconciliations, and forecasting is absolutely essential. Now, some treasury teams will need to expand the digital and technical knowledge to support the company's transformational journey as well. So we're talking like the skill set required for treasury professional actually has been evolved, right? Also, as our TP volume increase, initiatives like Project Nexus are expanding across different markets, and that they're utilizing ISO 222 standard. This ensures seamless communications between different domestic LTP systems. Additionally, the use of digital distributed ledger technology, DLT, and the growth of digital asset, CBDC, along with the introduction of stablecoins, have sparked interest in exploring new treasury management applications. Now, these advancements are paving the way towards real-time treasury. Companies like Ant Internationals are leading the way by executing real-time tokenized transfer between blockchains wallets in Hong Kong and Singapore. These innovations offer 24/7 access to secure, digitalized liquidities, enhancing financial visibility and control.
Brilliant stuff. Yeah, the Ant International story I've been following very closely, and we recommend our listeners to have a little look at that online. So it's very interesting what's been happening there. Yvonne, just really quickly, any other challenges corporates face in digitalization and maybe anything you've seen in terms of how they address them?
Yeah, I think it goes without saying that like corporate must tackle cybersecurity and geopolitical risks by bolstering their risk management framework. Strategies such as risk diversifications and talent developments are essential to address these challenges effectively too.
Yes, so no doubt we'll get into those a little bit more later in the podcast. But Sridhar, let's bring you back in and talk a little bit more about the supply chain shifts. So they're becoming more regionalized. We've got more companies localizing operations and sourcing within Asia, as we spoke about at the top of the podcast. What are the key themes driving this shift in supply chain conversations? And which countries do you see on the rise here? Are there any specifics, any hot tips?
We spoke about the prevalent uncertainty in the markets and how the confidence in decision making is obviously low in an environment ridden with uncertainty. So the first thematic we see is wait and watch. To not do anything, just absorb. But for the few conversations that we have picked up outside of the wait and watch, the first is onshoring. And corporates, where possible, trying to enter the US market in any capacity or increase the proportion of the US produced goods in their supply chain. Now, we have picked up some conversations. Asian shipbuilders, for example, talking about forming joint ventures in USA. We have seen Asian electronics companies starting or in some shape or form where they already had a presence to expand their production in the USA. We have seen automobile manufacturers in Asia boosting their US output. We have also seen wine exporters from Asia, actually Asia Pacific to be clear, relocating some part of their supply chain, specifically bottling activities, into the US to gain economics in the process. The second theme is pretty intuitive, that if my current supply chain setup is not going to work, can I look at alternatives based on relative tariffs? can I align my supply chain with countries that have a favorable tariff? As simple as that. So on this thematic, we have picked up conversations from an Asian optical instrument manufacturer who's shifting production or planning to shift production from Mexico to Thailand. A garment manufacturer talking about, operations moving from Hong Kong to Bangladesh, Cambodia, and even Vietnam.
Yeah.
We have heard of a pharmaceutical company from India proposing to use Thailand as their base, and textile manufacturer trying to shift operations from Thailand to Egypt, as you know, which has a base tariff of 10%.
Yeah.
But beyond these two themes, on the supply chain side, corporates are also wondering, is it possible to de-risk themselves from having a single large buyer? Can I look at markets outside? So we have seen an Asian furniture manufacturer trying to diversify their sales away from US into European Union and also some parts of Asia itself. We have had conversations where an Australian garment company is transferring inventory to EU, and also some textile players seeking new markets in Africa, for example, and also EU. So EU is coming up quite often in the conversation. I would round off by also saying there are potential conversations around opportunities as well. Remember, it's not the absolute tariff that your business and supply chains are facing. It's what your competitors are facing as well. So has the new tariff rendered my supply chain more competitive compared to my competitor?
Yeah.
Of course, these conversations are quite few, and I think people are focusing right now on getting their shop in order with the new tariff-ridden world. But I'm pretty sure this topic will also gain traction in due course.
Oh, absolutely. It's not going to be going away. But Sridhar, from all of those conversations that you've had, and it sounds like clients are coming up with new ways to think about things, think about how they operate in this new tariff world, what would be the key considerations for corporates? If I put you on the spot to give us a shopping list of 5 or 6 things, what would those considerations be and why?
So I would probably split my answer into two. I would call it primary and the second order, right? So on the primary side, I think the first and foremost is you have to allow the analysis of the impact of the new tariff to your own supply chain. How are you faring independently and comparatively? One has to reassess the competitive position and calculate in very simple terms the landed cost of your product into the hands of the consumer. And how does it fare compared to history and compared to competition? There is a higher cost, right? They have to figure out who's going to bear the cost. Should the manufacturers absorb? Should the people in the ecosystem all the way through the customer, should they absorb some part, or should the customer take part of the cost? There's no formula. You have to evaluate and find your way through to the right balance. One has to consider contingency plans. What should I do if nothing works? Do the current tariff world and the current country of origin rules allow me to diversify to a place which gives me a relative advantage? And keep in mind, the operational load has increased for the corporates. Compliance-wise, documentation-wise, regulatory filing-wise, these are all on the upside now. One has to consider, how am I going to deal with these steps as well? And don't forget, most companies have shareholders and boards to inform and keep them updated on A, what's happening, B, what's your plan, and C, continuously update them on the progress of that. The second order part are far more linked to our BAU activities as a treasurer. New countries expose your businesses to new currencies and regulations. They bring in new variables in the form of new foreign exchange risks, newer interest rate risks, and this requires a reasonable amount of navigation. I want to make a point here. It's not just about absolute tariff or the absolute baseline tariff, because if that was the only criteria, you would probably say China at 30%, Malaysia at 20%. So Malaysia is 10% better than China, right? But what if I told you that over a 2-year period, the Malaysian ringgit, adjusted for inflation, has appreciated as a currency by approximately 12%. This is what we call the REER terms. Now, does it seem so easy now? It doesn't, right? Keep in mind, volatility has gone up. Currencies have moved 2 to 11, 12% since April. Commodity prices have gone up and down. Freight rates have reacted. the cost of taking a wrong decision or no decision has gone up. Now, when you go into newer markets, you have to consider what happens to your working capital cycle. The tenor of the cycle, the quantum of the cycle, both could be higher and longer. You have various financing options to consider because you are in a new market. Should I borrow at my home currency? Should I borrow in a different currency? Are there exchange risks involved? There is also a conversation about the tools that have been historically using to mitigate my financial risks. Are they adequate? Are they fit for purpose?
Yeah.
Will they serve my needs now? And last but not least, I want to talk about this aspect of enterprise risk and resilience. And this is where the treasurer has to wear the CFO or the CEO's hat and ensure that the risks that are there and that can be mitigated is one story, but there will be residual risks. And does the enterprise have enough buffer to take care of the residual risks? And this is the resilience of the corporate that I want to bring into picture.
Yeah, absolutely. So much to consider, Sridhar. Thank you for that. So Yvonne, let's bring you back in here because Sridhar mentioned the liquidity side of things. That liquidity risk obviously remains a top concern for corporates. We've got interest rate risk on top of that. But in Asia, the financial market cycles are different. So tell us a little bit about how companies are adjusting their approach to things like debt financing, liquidity management, working capital. What are they doing to stay resilient? As Sridhar has said, we really need that resilience happening behind the scenes. So give us a flavor of what you're seeing.
Yeah, this is a very topical point that we would like to gather more information from our clients. So that's why we have interviewed 460 treasurers, practitioners across 8 Asian markets and produced a report called HSBC Redefining Treasury 2025. Now, from that report, we have got the insights that the critical importance of managing treasury functions under this fluctuating foreign exchange and interest rate environment. Now, it's not a surprise that about 60% of our clients in Asia are feeling the heat from market volatilities. Treasurers are stepping up the game, just like what Sridhar mentions, because they actually need to play a more strategic role in fostering growth and managing risk, especially with the added pressures from the high interest rate and ongoing global trade tensions.
Yeah, of course, Yvonne. But what does that mean for treasurers' top priorities as a result? You say they're stepping up the heat. What are they looking at specifically?
Yeah, so amongst all the subjects that they've talked about, there are 3 main points that they have put as their priorities. Now, the first one is active risk management. Treasurers are focusing on active risk management to safeguard profit margins. They are employing tools like derivative, natural hedges, and multi-currency cash flow planning to maintain stability despite interest rate and FX fluctuation. One of our clients mentions that FX hedging and cross-border cash pooling are essential for their business. Now, the second priority is leveraging internal cash. Now, our clients are innovatively using internal cash through in-house banking and cash pooling to achieve self-funding and address liquidity risk. They are also diversifying funding sources beyond the home market, which is crucial in regions and locations with capital controls, like, for example, in China. Now, establishing financial hubs in locations like Hong Kong and Singapore is part of this strategy. So the third one will be the role of real-time data and AI, which is transforming cash flow forecasting and liquidity management. Now, these technologies enable treasurers to anticipate risks and navigate volatility with greater confidence. Notably, over 77% of treasury professionals view AI as an increasingly valuable asset.
Sridhar, let's bring you back in and get a sense of everything that's going on here. There's so many financial risks. Yvonne's described a lot of them and some of the wider risks as well. What are the key considerations here for corporates when they're dealing with these? And what would you say in just fairly simple words? How can they go about thinking about what they should be doing here to make sure that they're keeping on track?
Look, we can keep defining uncertainty in degrees, but uncertainty is a common aspect in business. And why go far? When we saw how corporates reacted and acted during the massive disruption that they faced during COVID, right? So the complexity has increased, surely. The variables are fluctuating, but the building blocks, I would say, have remained more or less the same. The first stage is building awareness of what are the risks to your business in this changed landscape. The second step is that of quantification of the risks, especially financial risks. The third step is asking yourself whether these risks can be mitigated using mitigation tools. And the last part is wearing on the enterprise hat and evaluating, after all the mitigation activities have been done, the residual risks that you have, is that something an enterprise can withstand? Do they have the adequate buffers? I would put it as simply as that.
Yeah. That makes sense. Just coming back to the mitigation tools, and you mentioned hedging there. We've spoken about FX exposure already, and we've got people going into new countries. Therefore, they've got these new currencies to deal with. Tell us a little bit more about what's driving the uncertainty around FX at the moment, and how Treasury teams are adapting their risk strategies to manage this currency volatility that's out there.
So look, geopolitical and trade disruptions, such as what we are seeing right now, tariff events, they have consistently heightened volatility in the currency markets. And the trend has been pretty pronounced in the recent years, but especially since April this year, we have seen that at an extremely heightened level. I'll just throw a few data points just to elaborate what I'm talking about. The dollar index, if you talk about currency, has dropped by about 7% broadly. And against that, currencies like Malaysian ringgit and Thai baht in Asia have appreciated by over 5%. Swiss franc, Brazilian real, and Mexican peso have approximately appreciated by 10 to 12% in the same period. Take commodities. Oil has fallen by nearly 10%, but gold, on the other hand, has surged over 12% against the dollar. Now, interest rates, not to be left behind, there are two stories there. With the weakening economic outlook, most countries, the policy rates and the short end of the interest rate curve are dropping down, whereas the fear that economies will have to spend more at a government level are pushing the yields in the long run up. And also there is divergence amongst key central banks as well. Like Japan and EU are slightly towing a different line in terms of monetary policy compared to some of the other large economies. So the macroeconomic situation remains unsettled. And in this context is where we see foreign exchange and interest rates as critical variables that corporates have to deal with. I would like to reiterate one point here, which I mentioned, that the value at risk per unit of risk has significantly increased in this period. In summary, what I have seen is there is a noticeable increase in the quantum of hedging and the tenors of hedging that corporates are carrying out. And I have also seen amongst a lot of our corporates, they have moved away from traditional hedging tools, linear products like forward contracts, to more bespoke and customized FX options products to manage their risks. The corporates are increasing their discussions of investing in data and analytics, spending more time in understanding and raising the awareness of the risks. They are grasping with the liquidity and volatility dynamics of different markets, as you said. They are re-evaluating their historical patterns of hedging and the duration of hedging. And they are certainly exploring risk mitigation strategies going beyond the conventional financial market tools as well.
Yeah, and that makes complete sense in this environment, not just sticking with what you know and those vanilla products, but looking what's more suitable. And also there's, like you say, there's more data out there. There's more technology out there to help people.
Absolutely.
Let's dive into that a little bit. Yvonne, maybe you can give us a few examples of how the bank's investments into technology are helping corporates, and anything else you're seeing as from a tech point of view from treasurers that might be interesting for our listeners.
Yes, we have been actively developing a suite of tools to support our clients. Now, we understand that treasurers require real-time data to make informed decisions. So we offer APIs for transaction inquiries and account information, assisting companies like Unilever in visualizing the transaction details across all their accounts around the world. Now, to address FX and currency risks, we understand that businesses are concentrating on optimizing liquidity within the structure. Now, this includes the use of automatic cash concentration solutions to mobilize their cash balances and liberate trapped cash across border, and refining Treasury investment policy to maximize return. We also believe that robust tools are crucial for corporates to achieve just-in-time liquidity. So in markets where FX controls are prevalent, HSBC has introduced data-driven tools to streamline the regulatory reporting process to enable straight-through processing. Now, for example, In India, Indonesia, and Thailand, we have launched UniTransact, which is a digital platform designed to streamline foreign currency management and the cross-border payments process from start to finish, including FX booking and document submission. In China, we have introduced a service called SpeedX, which is designed to streamline regulatory reporting process that cuts cross-border transactions times by up to 75%.
Wonderful stuff. Well, there's an awful lot going on, but Sridhar, I'm sure you've got more for me. What are you going to add to that?
Yeah, I doubt if I can add much to what Yvonne has said, but I'll take my shot at it. No, we spoke about how corporates are increasingly spending a lot of time in understanding, calculating, and planning risk mitigation strategies, right? So the good news, if there was one, is that technology is really, really helping this processes and making the tasks for a corporate, I would say, a bit easier, a bit more efficient, and perhaps a lot more accurate. HSBC has made significant investments to support our clients in this area, and I want to call out two such examples. The first is HSBC AI Markets. Now, this is our digital platform that leverages AI to deliver real-time market insights, analytics, and tools to the corporates to help them make informed decisions and manage risks effectively. Clients are onboarded into this platform. They are benefiting from its features because it aids them in understanding FX rates and options pricing. It allows the corporates to access our in-house research. It also allows the corporates to perform analytics on the risks that they are running and the market variables. And it also helps the corporate evaluate liquidity across various asset classes. The other piece of investment that we have done, and I would like to call out, is AutoHedge. This is an automated FX hedging tool or a product which really simplifies the FX exposure management for a corporate. Simply put, it reduces the operational burden for corporates. It allows the corporates to seamlessly manage the exposures and the hedges in one place based on the corporate's own chosen defined rules and principles that they can embed into this program. So yes, technology is important and technology helps the corporates, and HSBC has been investing in this space to help the corporates.
Wonderful stuff, Sridhar. Thank you for that. Yvonne, final question to you, and then we will wrap up. Although I know we could go on all day, I think, in this podcast because there's so much to talk about. But with the pace of change in intra-Asia trade, supply chains, all of the digital finance that we've spoken about, what's the key takeaway for Treasury teams looking to place themselves in the best possible position to stay ahead? I know it's hard to whittle it down.
Yeah, this is a difficult question. So I think business today are indeed facing a challenging trade environment. Global trade policies such as tariffs are significantly influencing trade and investment balance across countries and industry. This is particularly evident in rapidly growing regions like China and ASEAN. As these trade patterns evolve, companies are compelled to reassess their supply chain, seek new partners, and explore fresh markets to adapt effectively. Now, based on our discussions with clients, cash is a vital resource and managing it effectively is crucial. Now, one core focus is to preserve capital by mitigating risks associated with cash. This involves managing exposure to country risks, currency depreciations, and counterparty defaults, ensuring cash availability for seamless operations. Real-time data is essential for supporting 24/7 business operation. Now, another thing is to mitigate FX risks and enhance cash visibility. Company might centralize operation using in-house bank structures or adjust invoicing currency. This simplifies FX management and centralized payments for group entities.
And presumably those advanced forecasting tools and things play quite a big role here, and maybe something that our listeners should think about looking at for the future.
Yeah, advanced forecasting tools and real-time data are pivotal for predicting and managing risks under uncertainty. Now, building future-oriented treasury involves creating a digital treasury that provides a global, real-time view of cash positions and financial exposure. According to HSBC's Corporate Risk Management Survey, about 55% of CFOs consider cash flow forecasting and monitoring as key components of treasury management. Now, interestingly, over 93% have experienced losses due to inaccurate forecasting. So by leveraging data analytics with external variables and AI tools, Treasury can gain a clearer understanding of liquidity and funding needs across various scenarios.
Yeah, I'm sure 93% of the listeners will identify with that as well, Yvonne. But it's great that there's all of this technology and data that's becoming more available and more usable. So thank you for that. Sridhar, let's come across to you. Any final takeaways for our listeners?
Thanks, Eleanor. We spoke a lot about technology, but I want to say that in these highly volatile times, I would even go ahead and say uncharted times, beyond technology, I would say reach out to us, speak to us. We have our teams with rich experience in each of these 18 critical markets in Asia. We have a presence on the ground, and we can be your able partner as you seek to navigate this highly, highly unpredictable times. And a simple message to all of you is reach out to us.
Brilliant stuff. Thank you, Sridhar. It's all about partnership and people and knowledge sharing, which is exactly what we've done through this episode today. So thank you both ever so much for joining us. That's a wrap for this episode of Treasury Beyond Borders. Thanks to everyone who tuned in as well. We hope you enjoyed the discussion as much as we did. And be sure to subscribe, stay updated on our other episodes, and also watch out for the articles accompanying this series. But for now, thanks again to our wonderful speakers, and thank you to everyone for listening.
Thank you for joining us at HSBC Global Viewpoint. We hope you enjoyed the discussion. Make sure you're subscribed to stay up to date with new episodes.